Okay, well, thank you very much for taking the time to come listen to a little story about Globex Mining Enterprises. We're a little bit of a different kind of exploration and mining company. We're really actually a business that tries to make money. So I'll just get into it very, very quickly because we have a lot of ground to cover. Forward-looking statements, I'm sure you've all read these kinds of things, and the standard information is on our website. So what I'd like you to do is, as I do this discussion, is that you focus on the value of, we're such a different company. We have so much locked up value that has not been recognized yet, and you'll see why as we go forward. So Globex's business model is basically to do anything that has the potential to allow us to make money. We have a lot of precious metal properties, we have a lot of base metal properties, and then we have a huge number of specialty metals and minerals, including lithium, talc, titanium, antimony, manganese, uranium, dolomite, scandium, and so on. Then we also have a business, because of the way we do our business, of royalties. And I'll go through the exact numbers of these things as we go along, but we have a large number of royalties that as these projects advance and if they get to production, we end up with revenue streams. So the things important about Globex are that we are diversified. We only work in areas of low political risk, particularly Eastern Canada, Germany, and the United States. We have a business of option sales, joint ventures, and royalties. Then we also, unlike a lot of other junior companies, we have cash, which is quite remarkable for a junior company. And actually, this is, even though this is a December presentation, the actual number of cash and value of cash and shares is up around 25 million at the moment. We also have no debts, and we own all of our assets. So what is our business model? What we do, we consider ourselves, we consider ourselves a property bank or incubator. We specialize in acquisitions of mineral assets. Then we get these assets, we upgrade them through intellectual input. Then we generate revenue through options and sales of those properties. The fact that we generate revenue means that we have less shareholder dilution, increased exploration with the risk being taken on by third parties, not by us. And at the same time, we avoid debt. And all that increases the value of our portfolio. If you look how we've been building up the company over time, you can see here the red bars are the number of properties that we have. Right now, we have 219 assets, including 89 royalties. You can see steady growth. So the current company profile is we have 55.7 million shares out. That's after over 35 years. We have never done a rollback. Those are all original shares. Fully diluted, about 58 million. Myself and my wife, we own 11%. We're the largest shareholders. The board consists of professionals in the industry, 3 senior geologists, a mining accountant, and a senior finance professional. We're listed on the Senior Toronto Stock Exchange. We're on multiple exchanges in Germany, and we're by invitation the first company to list on the OTCQX International in the United States. The board of directors, I'm the president. I'm a geologist with over 40 years experience. Ian Atkinson is on the board. He's currently a director of Kinross, also over 40 years experience. Hans van Hoof, who is a finance professional. He's been, last position was chairman and senior executive officer of Soros Funds, but as you can see, multiple positions in senior positions in banking industry. Diane, who is my wife, she is retired, but she has over 30 years with Globex as the CFO and corporate secretary. Prior to that, she was a senior analyst and revenue planner for Noranda Mines. And Chris Bryan, who's a retired geologist and mining analyst. He was a mining analyst and portfolio manager for Caisse de dépôt et placement. So all people with hands-on experience. The types of projects we have 219 projects. 113 are precious metals, 61 are base metals, 45 are specialty metals and minerals, of which 89 are royalties, 8 are active options, which generate cash payments, share payments, exploration expenditures that we don't have to do, and risk that we don't have to take. And at the end of the story, we end up with what's called a gross metal royalty or a gross overriding royalty. In most of those cases, gross overriding royalty or gross metal royalty is a bit different than net smelter royalty in that it is the percentage of the metal or mineral as it comes out of the refinery or out of the smelter. So no deductions of any kind. So it's the purest form of a revenue stream. 55 of our projects have historical or NI 43-101 resources, and over 40 of them have former mines on them. And in the industry, it's common, the saying is the best place to find a mine is beside an old mine, because you know the systems are functioning. This slide shows the distribution of our properties. The large map in the center is the Abitibi of Quebec and Ontario. The gold stars are gold properties that we have, and the blue stars are base metals, and the red are specialty metals and minerals. And some of the lines, those black lines you see, are important geological structures. For example, you notice on the south here, between Kirkland Lake and Val d'Or, there's a lot of gold stars. That's the Cadillac break. We have lots of ground there, the Joutel mining camp, the Chibougamau mining camp. If you go to the map on the top left, the white area is the larger map, and you can see we have a lot of properties outside of the Abitibi in Quebec, New Brunswick, and Nova Scotia, and several in the United States, Washington, Arizona, and Nevada. And as a matter of fact, we're still acquiring projects in rare earth projects in Nevada. And then on the bottom map is Germany, and we have a very nice silver project in Saxony, Germany. So what do we look for? What are the characteristics of our properties? They have either historical or NI 43-101 resources or drill intersections of economic interest, past production, mineralized showings or drill targets, whether they be geophysical, geochemical, or geological, and they're located in established mining camps or on important structures, which are localizing structures for mineralization. I'm sure you've heard of names like Cadillac Break, Porcupine Dester Break, mining camps like Noranda, Val d'Or, Joutel, Malartic, Chibougamau, Timmins, and so on. Our properties are in those kinds of geological locations. We have a number of projects which are well advanced, and I'll be going through them a little bit as we go on. But for example, some of the more near-term production potential, there's a company called Labyrinth, which have the Labyrinth gold deposit just west of Rouyn, Noranda, about 1.5 million tons. We have a 5% gross metal royalty on the first 25,000 ounces that they produce and 3% thereafter. The Authier lithium property, Sayona is putting that into production. We have a half gross metal royalty on the center of the open pit. Fiol, which is an open pitable gold deposit. We have a 2% NSR. It's an NSR because we bought the royalty from another company. Bell Mountain, that's a project in Nevada, open pit, heap leachable. We have an advanced royalty plus a 3% gross overriding royalty. And then Magusi, which is a polymetallic project just north of Rouyn, Noranda. On the bottom, you can see exploration, various companies that are working on our projects. We do exploration ourselves. Our budgets to maintain the company per year is anywhere on a busy year between 2 and 3 million. And we currently, as I said, we have about 25 million. You can see all the companies there. They're taking the risk. They're doing the expenditures. We sit back and let them add value to our assets. Just to go through some of our deals quickly, this is the area west of Rouyn, Noranda, where Yamana are putting the Wasamac, they're advancing the Wasamac project to production. You can see it says on the top right, Wasamac mine, and the structure for the Wasamac mine goes straight through that block on the left with all the different names, Francoeurs and Arnfields. That's a property that Globex owned. We were able to do a deal where we sold this project to Yamana for $15 million in cash and a 2% gross overriding royalty. And they are advancing the project because they intend to build a mill at Wasamac, and they want more feed for that mill beyond the Wasamac mine. So an excellent project. They still have to pay us another $8 million over the next 3 years. So on top of the 25 million in cash and shares that we have now, we have another 8 million guaranteed, plus the revenue from the other projects that we're doing. This is the Joutel mining camp. We own 3 out of the 4 former mines in the camp. We have done 2 option deals on the property, one with Maple Gold Mines and one with Orford. Both of the deals require cash payments over several years, share payments. A matter of fact, we just got another almost 1.5 million shares of Orford. And actually, the last 2 press releases, if you go look at it, are updates on work that they've undertaken. There are the three deposits that we have. Maple is working on the Eagle Gold Mine. They have 3 drills working on that at the moment. And we also have the Poirier mine and the Joutel mine, which the Poirier is a copper zinc mine. And the Joutel is basically a copper, but there is a zinc deposit as a separate body in the zone. Lots of potential. We've also acquired a large package of ground on strike of the ground that Orford is working on. They're drilling in what's called the South Zone, and we have what we think are priority targets just off the end of that structure. Again, I'm going through these things quickly just to show you the kinds of value in the deals. This is the Labyrinth project, or what we used to call the Russian Kid gold mine. This is the one where we have the 5% gross on the first 25,000 ounces and 3% gross thereafter. You can see all those sort of orange, this is sampling underground. All the orange spots are 1/2 ounce or better. The yellow are 1/3 of an ounce and better. There's already a ramp and several levels, and there's already 1.5 million tons of inferred resource of 7.4 grams outlined. And Labyrinth is currently working to increase that resource and bring it towards production. This is the Magusi project. We've done a deal with a company called Electro Metals. This project is going to be over a period of 4 years, $6.4 million in cash payments, 7 million shares, $12.25 million in work, and a 3% gross metal royalty to us if they get to production. Now, the Magusi deposit, which is on the left in this large package, has a defined resource of copper, zinc, gold, and silver. The ramp is started, the road is in, the power is in, and they are working towards getting that project into production. This is just a snip of a long section on a property called Kawagama, which is part of a larger package owned by a company called Radisson. And Radisson are drilling on this project, and you can see lots of good gold intersections. Those bodies there are areas where there are resources outlined, but the drill holes below are getting good values to depth, like 13.8 grams of 2.4 meters, 7.7 grams over 2 meters, 8 grams over 2.2 meters, 45 grams over 2.1 meters, and so on. So those arrows are showing the trends of the mineralization, and it's open to depth. And as well as on strike to the east, the ground has not really been explored. And then we have the next package of ground to the east. This is a sketch just showing the proposed open pits on the Sayona lithium project. We have a 0.5% gross metal royalty in the center of the open pit. And also we are one of the largest shareholders of another company that has a half gross on the open pit. There's already almost it's over 17 million ton resource outlined, and they've purchased the company. Sayona have bought a mill nearby and are fixing it up to go into production either later this year or early next year. This is a quick map of the Chibougamau mining camp. All this ground here that is shown in yellow was an asset of Globex, and we spun it out as a separate company and gave it as a dividend to our shareholders. And we've kept, varies upon which property, between a 2 and a 3% gross overriding royalty. And we're looking at this idea of spinning out other assets at the current moment. On the far right, there is a property which is an iron vanadium project that we have a royalty on, and they've already got over 1 billion tons of iron vanadium open pittable outlined on that. So lots of gold exploration, lots of potential, lots of copper potential. You see the little red star there? That is another copper gold zone that we found. And I'm going to click. Whoop. It doesn't want to click to the next slide. Let's see if I go back. Okay, sorry about that. Okay, just to show you some of the potential of that area, this is a property that we picked up by staking called Berrigan, which we actually about 2 weeks ago, we announced another couple of drill holes on. This was a zinc property. And you can see here, this is just some of the historical holes. We have several pages like this. And you can see there's very, very good zinc values. But look at the gold values, tremendous gold values, tremendous silver values. Again, great zinc, great gold, great silver. This was only worked historically for the zinc, it was never mined. So we're trying to advance this property. And this is the kind of thing that we do, where we look for things where we see potential that other people didn't see, either in over time or currently. So we picked this up and we've done some drilling, and we've increased the historical footprint of this particular project. This is another area where I showed you the red star. This is an area where we went and did exploration, and we started drilling, and we came up with a copper zinc ore body, basically. It's open to depth. There are parallel geophysical anomalies that require drilling. You can see some of the deeper holes, like 7.7% copper, 3.58 grams gold over 9.2 meters. The deepest hole, 9.25 meters at 2.48% copper, 4.24 grams gold, and another 4.14% copper and 0.55 grams per ton gold over 5.5 meters. So lots of potential, things that people worked on before that didn't look at it in the current, what was the potential for the current outlook. This particular area, this whole camp was worked for copper. The gold was really not considered important. Now this is really a gold copper camp. This is a property we picked up recently. We're working on it, actively working on it at the moment. This is called the Rouyn Merger O'Neill property. There was a former small mine on the property. There's an incline shaft and 4 levels. If you look at the far right, you see there's a whole bunch of little green dots. Those are drill holes. And actually, we actually have a 2% net smelter on that, which we bought from some prospectors. But it's on, these are on the Cadillac break, and you notice when you get to the red line, which is our boundary, the drill holes are very, very sparse, but those holes do have gold mineralization in them. And there's lots of good grade intersections all along that Cadillac break. So we're currently doing mapping, sampling, and we intend to do a drill program on that. An exploration project. This is Montalembert. You can see free zones with free gold on surface up to 3,310 grams gold, or 96.6 ounces. You can see top left, you can see their gold just sticking out of the rock. Wonderful, wonderful project, lots of potential. This would be the Wood Central Cadillac property. We found another nice little deposit. It's only 250,000 tons, but it's 17 grams. On the Cadillac break here, you see that yellow line. There is the Wood mine and the Central Cadillac mine, and that Kibagama royalty that I mentioned before just ties right on. So that makes for a hell of a nice package. This is a project called Duquesne. We've just done a deal with a company called Emperor. It's a 4-year deal, $10 million in cash, 15 million shares, 12 million in work it's a 5-year program, and 3% gross metal royalty. There is already outlined, uncut, 853,000 ounces of gold, or cut 227,000 ounces for 4.17 million tons, grading 5.4 grams. And this was done at $960. So lots of potential, lots of various zones where work can be done. This is a project in Ontario called the Ramp property, 100% owned like all of our projects. Open pitable is about 270,000 tons, 3.5 grams. It's already pre-stripped, the road is in. There's a historical resource of 719,000 tons of 8 grams, part of a large property that requires more exploration. This is an oddball property. I'm going very quickly because we have very little time left. This is a Scandium project. The black rectangles are the property that we have. That red circle is the ore horizon for scandium mineralization. Scandium mineralization is used in the production of aluminum. If you want to make something like an airplane or a boat out of aluminum, you have to rivet it. If you add a little bit of scandium, you can weld it. Imperial Mining, up in the top left, have outlined about 20 million tons of scandium mineralization. They had a PEA done recently, values their project at $1.7 billion. We have half the structure, similar grade scandium grabs on surface, as well as rare earths. So a hell of a nice project and a great asset for the company. Saxony, Germany, we went and did some research. Found that there's an area in Saxony, Germany, where there had been pick and shovel exploration and production for about 750 years, never a drill hole, never modern geophysics. We acquired the ground. We showed that through more research, there was about $500 million of silver produced. We did a deal with a company called Exelon. They've done 2 drill programs, and they're carrying this program property forward. You can see here some of the areas where they've been drilling. The first 2 drill programs were to identify the geology and see if there was mineralization, the types of mineralization, and they've been very, very successful. They intend to continue, and they're looking at spinning out this asset to their shareholders, and Globex is a large shareholder. So wrap it up, because I'm sure you didn't want me to go over all 219 properties. We have very, very few shares out, and we have a history of not diluting our shareholders. The board is an experienced board, hands-on. We have income. That sets us apart from most of the other junior companies. Not only do we have income, but we also have revenue. About $25 million in cash and shares, about 60% cash, 40% shares, plus guaranteed another $8 million over the 3 years, plus whatever we're generating from all of our deals. We own our assets. We own all of those 219 property interests. We also own our offices. We own our equipment. We own our core facilities. We have no debt. So when times go bad, we don't suffer, and we can use our cash to acquire more assets. We only work in areas of low political risk, Eastern Canada, United States, and Saxony, Germany. And again, the board is a board of executives that are hands-on. Thank you. Dankeschön.
Thank you very much, Jack, for this presentation. We've got a few questions in the chat, and we have about 2 minutes to get down to them. First of all, from Kai, impressive story, fantastic projects, but is it really possible to manage this successfully? The share price is going at a low right now. Why don't ordinary shareholders benefit? Basically, amazing project, a lot of locked-in value, share price at a low.
Okay, what happened, we had, just very, very quickly, the share price got whacked for the last couple months, probably about 3 months, because there was a company about 5 years ago that wanted to buy one of our properties. We couldn't reach an agreement. They got mad and they went into the market and bought 4.5 million shares. And they voted against us at the next annual meeting, and then they've just sat on those shares for the last several years. Currently, they bought another large project, so they have 2 large projects, which, if they go to production, will cost them over $1 billion. But they need money for exploration and for other things, so they've been selling everything, including our shares. So they've just been whacking our share price. They've knocked us down significantly. Last week on Thursday, they were down to 5,000 shares from 4.5 million. So the market has been cleaned of them now. There's still one person shorting us, and we're in the tax loss selling. So I expect the share price to be low for the rest of December, which is a good buying opportunity. But in the new year, when the tax selling is over, I expect the stock price to start going up and reflecting the true intrinsic value of the company.
Well, I have to say that this is the first time that I got a straight answer to this question. So thank you for that, Jack. This is quite refreshing. Armin is also asking, well, you should be worth at least 3 million per project, 200 projects, 600 million, and so on. What do you think is a strategy to raise the share price internally? Is it special dividends? Is it, how do you see it, the value for shareholders to hold your shares to grow in the next 3 years?
Well, there's several things we can do. One of the value things we can do is, for example, is spinning out like we did with Chibougamau. For example, we have a number of rare earth properties, and as the price of rare earths and the focus goes to rare earths, that we're thinking about spinning that out to shareholders. One of the other things we're looking at, and I'm not saying we're going to do it, we're just looking at it at the moment, is we have the Ironwood deposit, that 240,000 ton deposit, very small, 17 grams. So we're talking half an ounce. We did a quick study. It can be mined out in 28 months with a ramp, no permanent infrastructure, just trailers. There's road access, there's powers. There are miners living within almost walking distance of the property. That will generate a ton of money if we do that. The other way we get the value is by doing deals with other companies. Like we're going to be announcing more deals. We have
perfect. Jack, I have to stop you. I have to be fair with everyone. Sorry about that. Thank you again for the presentation. Always very nice to meet you and follow up the companies and your growth. So we'll keep an eye on it. Thank you, Jack, and see you next time.
Thank you. Take care. Pleasure.